What is a debenture? A debenture is a form of debt instrument issued by either a company or a government to raise capital. A debenture represents a written promise to repay borrowed money on a specified date, usually with a fixed rate of interest paid over the term of the loan. The key aspects associated with debentures include acknowledgement of debt. A debenture certificate serves as formal acknowledgement of the debt owed by the issuer to the debenture holder. Fixed income. Debenture holders typically receive periodic interest payments at a predetermined rate, coupon rate, until the debenture matures. Repayment of principal. On the maturity date, the principal amount, the original loan, is repaid to the debenture holder. Transferability. Debentures can usually be bought and sold in the secondary market, providing liquidity to investors. No ownership rights. Unlike shareholders, debenture holders are creditors and do not have any ownership stake or voting rights in the issuing company. Priority and liquidation. In the event of a company's liquidation, debenture holders generally have a higher claim on assets compared to shareholders. Debentures can be classified based on various factors: secured versus unsecured, convertible versus non-convertible, redeemable versus irredeemable, registered versus bare or unregistered, first priority versus second priority. Security. Secured debentures, mortgage debentures, backed by a charge, fixed or floating, on specific assets of the company. If the company defaults, these assets can be sold to repay debenture holders. Unsecured debentures, naked debentures, not backed by any specific collateral and rely solely on the issuer's creditworthiness. They usually carry a higher interest rate to compensate for the increased risk. Convertibility. Convertible debentures can be converted into equity shares of the issuing company at a predetermined ratio and price after a specified period. Non-convertible debentures cannot be converted into shares and remain debt instruments until maturity. They often offer higher interest rates than convertible debentures. Redemption. Redeemable debentures have a fixed maturity rate on which the principal amount is repaid. Irredeemable debentures, perpetual debentures, do not have a fixed maturity date and are generally not repaid during the company's lifetime. Interest is paid perpetually and the principal is usually repaid upon liquidation. Registration. Registered debentures. The names and details of the debenture holders are recorded in the company's register. Transfer requires a formal transfer deed. Bearer debentures or unregistered debentures, not recorded in the company's register and are transferable by mere delivery of the debenture certificate. The holder is considered the owner. Priority. First debentures have the first claim on the company's assets in case of liquidation. Second debentures have a subordinate claim to first debentures and are repaid only after the first debenture holders are fully compensated. The central features of debentures are as follows. Face value, the nominal value of the debenture on which interest is calculated. Coupon rate, the fixed or floating rate of interest paid on the face value. Maturity date, the date on which the principal amount is repaid. Credit rating, an assessment of the issuer's creditworthiness indicating the risk of default. Higher ratings generally mean lower interest rates. Indenture, debenture agreement, a legal document outlining the terms and conditions of the debenture issue, including interest rates, maturity date, repayment terms, and the rights and obligations of both the issuer and the debenture holders. Trustee, often appointed to represent the interests of the debenture holders, especially in the case of secured debentures. The key differences between a debenture and other financial instruments can be summarized as follows. Debenture versus bond. In some jurisdictions, particularly in the United States, The term debenture specifically refers to an unsecured bond, meaning it's not backed by any specific collateral. The issuer's creditworthiness is the only security. In the United Kingdom and Canada, a debenture is often secured against the company's assets. Debenture versus share. Debentures represent debt, while shares represent equity or ownership in a company. Debenture holders are creditors, while shareholders are owners. Debenture versus loan. While both are forms of borrowing, debentures are typically issued to a larger number of investors and are transferable, unlike traditional bank loans. Debentures serve as an important tool for companies to raise long-term financing without diluting their equity. For investors, they offer a fixed income stream and can be a less volatile investment compared to stocks, although they do carry credit risk, the risk of the issuer defaulting. The specific features and risks associated with a debenture depend on its type and the creditworthiness of the issuing entity. For legal counsel with respect to debentures and other corporate financial matters, contact our law firm today. Thank you.